next guest, also a software bull, arguing that enterprise names will lead the way and benefit most as interest rates settle. Joining us now, BMO Wealth Management Chief Investment Strategist Young-Yu Ma. Great to have you with us this morning. So it kind of feels like we're entering maybe a comeback quarter. It feels like Q2 and that expectations are so beaten down, these sort of sprigs of hope that we're getting from the likes of Netflix and others, ASML so far, are giving investors a reason to jump back in. But we know how that ended last time. It was a bear market rally. What's different about this time, if anything?
Well, I think it remains to be seen what's different, but certainly estimates have come down a lot. So expectations have been lowered. And we are seeing some positive signs out of ASML. Of course, they're very distinctive in terms of really focusing on leading edge tools. But at least right now, the indications we're seeing out of software as well, enterprise software, it's not going to be a dire situation, even though there remain the macro overhang and those clouds that still remain. So that's still the concern that lingers. But certainly expectations have been lowered enough that it helps coming into earnings season to provide some stability in the market and for technology.
Okay, so maybe not dire for enterprise software, but we still have seen this sort of pulling back. We've seen these sales cycles become elongated. And I wonder, Young-Yu, if you think that we're going to start to see the effects of this on some of the hyperscalers, an area of the market that investors have remained confident about. Could there be any surprises there this quarter from the likes of Microsoft, Amazon, et cetera?
Well, certainly we expect a little bit of softness. The question is how much that's already baked in. I think it's probably largely baked in. And the macro overhang, the concern right now is that the macro overhang is going to be a several quarter question. And so that's right now what the markets are contending with. We have some stability, even some earnings beats given the low guidance or low expectations. But right now what we're contending with is this overhang, the economic backdrop is not going to go away in 1 or 2 quarters. It's probably 3-4 quarters that's going to be with us where we have high interest rates, slowing growth. And how that gets factored in is still a gradual process.
Does that mean that you think some of these upgrades on names like Micron, where they really are trying to time the inventory cycle and obviously the valuations that have come in, are those calls too early?
I think it's tough. It remains to be seen who can actually pick the bottom. But I think it's tough given how much inventory is still out there, given that we don't quite know how long the slowdown is going to be. And the drag on consumer spending and even the potential drag on corporate spending. So areas that have previously been stable, it remains to be seen in the coming quarters whether those start to slow down. Say the industrial areas where semis sell into or automotive, we could still see some slowdown there. So I think it's possibly a bit early, but it remains to be seen whether or not the economy can level off here.
Young-Yu, I wonder what you expect to happen with government spending on technology when governments are either spending on, the war in Ukraine, sending equipment over there, or helping citizens stomach energy prices, whether you're talking about Europe. I mean, there's so many different demands on government resources right now at a time when the global economy is also slowing down. Does technology spending from governments take some sort of a growth pause? What happens?
Well, I do think governments are going to realize they're going to have to support the economies in various ways. Certainly in Europe, that's happening. But the problem is that's offsetting other strains that are in the marketplace already. So the government spending that is there, a lot of that is to offset difficulties that consumers are experiencing right now. So I don't see it on net as necessarily positive or negative. But it's really shifting around some money and trying to alleviate the strains that are out there.
Yeah, key area to look to. Young-Yu, thanks for being with us today.
Thank you.